Well, this was the week the AI stock boom finally hit a wall. We're going to break down exactly why Wall Street's favorite stocks suddenly stumbled, and more importantly, what it means for your portfolio. So here's the rundown. We're talking about the NASDAQ's worst week in months, a major shakeout in AI stocks, some absolutely massive corporate deals, and the economic red flags that have investors on edge. Let's dive in. All right, so it was a rough week on Wall Street, no doubt about it. Let's take a closer look at just how much damage was done to the major indexes. The NASDAQ, which is, home to all the year's biggest winners, really took it on the chin. It dropped a steep 3%. That's its worst performance in a single week since the spring, which is a huge signal that the AI party might be hitting pause. Now, the broader market didn't escape the pain either. The S&P 500 saw a pretty significant drop of 1.6% as that nervous, risk-off feeling started to spread everywhere. And the Dow Jones also slipped, but its 1.2% drop shows it was a little more protected from that tech slump, mostly because it's full of more traditional, industrial-type companies. And this chart right here, it just tells the whole story, doesn't it? You can see just how much steeper the NASDAQ's drop was compared to the others. It really shows how this sell-off was laser-focused on the tech sector. So what was really behind this sudden change of heart from investors? Well, it turns out a few key factors came together to create kind of a perfect storm for a market pullback. Yeah, it really was a perfect storm of worries. You had this growing fear that AI stocks had just gone up way too far, way too fast. Then you've got a famous big short investor making bearish bets, some really worrying signs from the US consumer, and even a slump in crypto bleeding over. Now this is a big one. When the guy who famously called the 2008 housing crash, Michael Burry, comes out and says he's shorting AI giants like Nvidia and Palantir, basically betting their stocks will fall, the market listens. It sends a powerful signal that maybe, just maybe, the top is in. And it's not just Wall Street feeling the jitters. Turns out, consumer confidence took a surprise nosedive. That's a huge sign that things like rising prices and general economic uncertainty are really starting to worry everyday people. And here's where it gets really interesting. In this kind of nervous market, even fantastic earnings reports from some of the hottest AI companies couldn't stop the bleeding. It felt like investors were just looking for any excuse to hit the sell button. Palantir is the perfect example of this sell the news mentality. The company reported great numbers, but believe it or not, the stock still went down. I mean, just look at this. They beat expectations on earnings, and they even raised their outlook for the whole year. And revenue? It absolutely surged, up an incredible 63% from this time last year. Just stellar. But it didn't matter. The stock actually dropped after this amazing report. So why? Well, the conversation immediately pivoted to valuation. After the stock's massive run this year, investors started asking, is this price tag justified, even with all this growth? Now, on the flip side, you had Supermicro. And unlike Palantir, their earnings report was a clear-cut disappointment, which just poured more fuel on the fire of negative sentiment around AI stocks. Yeah, take a look at this. The company missed its revenue target by a whopping $800 million. I mean, that's not just a small miss. That is a huge gap. And to make things even worse, their revenue actually dropped 15% from last year. Unsurprisingly, the stock took a nosedive. But the week wasn't all about the AI sell-off. While some of these tech names were stumbling, other huge companies were making these really big, long-term bets with some major deals and decisions. So on the bright side, and in total contrast to the market's short-term panic, Amazon's cloud division, AWS, basically doubled down on its massive commitment to AI. Get this, AWS signed a 7-year, $38 billion deal with OpenAI. That is a massive signal about the true long-term demand for AI computing power. It shows that the biggest players out there are still investing huge amounts of money for the future, no matter what the market does week to week. The M&A market was also buzzing. We saw a huge deal with Kimberly-Clark buying Kenvue, the maker of Tylenol, and Pfizer making a strategic acquisition of Medsera after a bidding war. Meanwhile, over at Tesla, there was this major shareholder vote that got a ton of attention, and it was all about its famous CEO, Elon Musk. In a vote that everyone was watching, Tesla shareholders voted to reapprove Elon Musk's enormous pay package. It's a really controversial plan that a court had actually struck down before, and it ties his pay to the company hitting some incredibly ambitious growth targets. Okay,
So let's wrap this all up. After a week that was just packed with sell-offs, huge deals, and all these mixed signals, the market really feels like it's standing at a crossroads.
So what's the real takeaway here? Well, we're seeing this clear split between the long-term optimism in AI and some very real short-term anxiety in the market. So the big question for all of us as investors is this. Is this just a healthy pullback, or is it the start of something worse? Do you trust the corporate giants making these billion-dollar bets on the future? Or do you listen to the nervous traders who are selling at the first hint of trouble?